Hello, everybody. Happy Sunday evening and a late Sunday afternoon to those of you out here on the West Coast. We're looking at minus 4.5% on the open of our futures. What is going on? Hopefully, we'll be able to make some sense out of this. I think we will be able to. But yeah, that's a significant opening. So we'll take a look at it. Got some charts. Hopefully, you were with me last Sunday because it'll make a little bit more sense. So I'm Bart of Barts Charts. I've been around with JC, I don't know, going on maybe 15, 20 years. I was a CMTI instructor for JC when actually it's kind of funny. Maybe we shouldn't get back together because the last time we were together doing something in the market, it was CMTI and the market was crashing in 2007 and 2009. Yeah. So just so you know, and I should have put this in the brief, but I didn't. I was working for a small little kind of boutique charting shop called When to Trade Group. And we used to put out all kinds of stuff out of Reuters and stuff. And it was 2009. I actually put a buy XLF out March 6th, 2009. Think about it. That was kind of crazy. I got so much hate mail for that, kind of like the gold, sell gold call. But so don't worry about it. All right. Hopefully you've seen this correction coming and you're protected. So let's get to it. 4.5% on the opening, though. That's a little significant, but hopefully this will all make sense. All right, let's rock and roll. Okay, what do we got? So, folks, we've seen this coming. I posted this on my blog, Barts Charts, on December 17th, 2024. It took almost 4 months for this thing to basically distribute, right? It was a distribution top for now. And so I had these targets. Here was the New York Stock Exchange Index target. And I've been looking at that for a long time. The big thing was, so let's just think about this, okay? Euphoria, 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 market's going up, market's going up, market's going up. And in this case, the New York Stock Exchange Index hit an exact 1.68 price projection from the all-time low. And everybody who was buying stopped buying and started selling. My question is, why? How does this work? I have my theories. We can go into that at a later date. But here's the New York Stock Exchange Index, right? And you can see I had higher targets too. Ultimately, the market's going to correct when it's time. And so obviously it was time about a week ago. But ultimately, we hit these price targets and they were very well advertised. Here's the NASDAQ. And again, look, there's not a lot of moving averages, the market indicators, Elliott wave, oscillators. It's just measured moves. And so I trust these measured moves because I've studied it for 24 years. So if we think about it, from the all-time low in the NASDAQ composite up to that first blue arrow, that's all the fundamentals, that's all the technicals, it's all the astro, it's all the market indicators, it's everything in that measured move. So it repeats. So in this case, the NASDAQ almost perfectly likes those blue lines. And every time it does the blue line, what happens? It corrects, usually about 30%. I was holding off on that last week because I didn't know whether we were going to bounce off of the 1v1 trend line. By the way, we didn't. It didn't even stop. A little surprising, and it's kind of making me question, I wonder if this 1v1 trend line even works. I'll show you this in a second. Sliced right through it. But ultimately, these measured moves are very, very powerful. And each time these measured moves complete, we correct about 30%. So that's kind of my expectation now. 30% correction. Ultimately, we got to look to buy this, okay? And I think we're going to have a low coming in this week. A low, not the low, a low. Check out the S&P. Same thing. Almost perfect, you guys. And this was obviously from the 2009 low. Here's the Dow Jones. Perfect projections, right? And you can see I had almost about a 1,500 point range, right? So I wasn't sure which one it was going to be. And then the other thing that we'll start talking about is there's other ratios besides 0.618. In this case, the Dow Jones, it completed an exact natural logarithm, 2.71828. That's E, which, oh, by the way, is embedded in the Great Pyramid, thousands of years before it was ever discovered. So we could see this coming, folks. That's all I'm saying. And I saw it coming in December, and I was like, we better get defensive, and it was a little frustrating, to be honest with you, right? Because I'm waiting for a signal reversal candle. You never want to step in front of the train, right? And so it would go down a little bit and then it'd go back up. And I'm like, okay, go down a little bit and then go back up. And I'm like, this might be in a distribution phase. It looks like it was. Okay. So here we are. New York Stock Exchange Index monthly. We've been watching this now for 4 weeks. And what have we really wanted to watch? The retest of this 1-by-1 trend line. So right here is the all-time low, October 3rd, 1974. On the New York Stock Exchange Index, I think it was $343. And so this red line represents 1 day over, 1 point up. The first time it hit it, bam, out of nowhere, right? No, there was no trend line connecting this. Look, right? Highs or lows. This was a 1v1 trend line. Bam, hit it, corrected 30%. Okay, wow. Next time, I thought, and again, I'm not a bull, I'm not a bear, I'm a pattern guy. And I try my best to find patterns that help us get into the market or find where the inflection points could be. The work I did in December, that's all gone now. Now I'm shifting my mindset to where's the likely best place I can manage risk, because that's the only thing we can control, and buy. So I've already flipped. I don't care, but I just wanted to show you how we got here, right? So, folks, it should have at least paused at the dashed red line. It didn't. Ooh, I mean, look at that. It sliced right through it, folks. So to me, that's when I kind of went, uh-oh, we got a healthy correction coming, which, oh, by the way, we needed, right? So again, I hate to say, yeah, the tariffs are a massive deal. I'm not a fundamentalist. I think I've told you guys that. I kind of understand them. They're a massive deal. But again, the news breaks with the cycle. These targets had been hit. And if you look at it, this is the New York Stock Exchange on a monthly. It hit it 1, 2, 3, 4. It was 4 months. This is a 4-month consolidation period before it finally broke, right? Look up here. This was almost a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 months up there. And then it finally broke, right? So, all right, we're in a correction. Where could it likely go? Well, you know me. I like to say, what did it like to do the last time? What did it like to do? It likes the red arrows. Now, we have these other corrections, and that's why I think we'll probably find some support here. And I'm sorry I didn't overlay them. I should have. But doesn't this look like a healthy correction here down to 14,000 on the New York Stock Exchange Index? It's done it before. In fact, every major correction, it has done it. And it just happens to be sitting on what? The 382 from the 2009 low. Folks, hate to say it, that looks like a really good target about a month from now. Okay? Hopefully that's making sense. I wanted to show this because I had done some work on the NASI, and I was looking to buy it for a bounce. Trust me, for a bounce. And so I'd done a lot of work, and I'd come up with a really nice support zone. And what I want to show you is, again, I think it was 2 or 3 weeks ago, we talked about failed patterns tell you a lot also, right? You know you have, air quote, a good level when the market, it goes and it gaps right over the whole thing. It gapped right over the whole thing, precisely. Isn't that crazy? I was like, ruh-roh. And then this blue arrow here, that's the entire corrective move in the NASDAQ from 2000 to 2002, folks. Yeah, no kidding. Not so much. Blew it away. So where would it want to go next? Let's say the COVID crash here. Okay, that's that dashed blue line. That takes us down to about 14,000 on the NASI. So what do we really want to see? And I'm going to be working hard to find a support zone. I don't know if I'm going to buy anything here, right? But ultimately, I do believe we're going to find some support this week. This will probably be a bounce of let's say, a week, maybe 2 weeks. And then if it's a normal corrective move, right, a three-wave corrective move, we're going to go down, up, down. We want to short that down move coming up. It should come up, okay? So this could come to back down here, folks. I mean, I'm looking at it as real time. We're down 4% today. who knows if this thing could really accelerate. So keep that in mind. But I wanted to show you this. A lot of times you knew you had a good level. It gapped right over it precisely. Isn't that crazy? Think about it. Think about that New York Stock Exchange 1.618 price projection. What is going on? So let's look for 14,000 on the NASI this week. I know that sounds crazy. Okay, so how about Mr. Dow? Well, we showed you the measured moves. And what I want to show you guys is in an environment like this, right? An environment of, let's just call it a pretty heavy correction. I don't think that's anything out of the ordinary. You want to have the farthest and largest and longest and just as much data as you can. So I, for one, know that the all-time low on the Dow was August 8th, 1896. And that was $28.48. So look down here at the bottom of the chart. You can see 28.48, 28.48, 28.48. When we're working with Fibonacci retracements, we call 28.48 a node. It's a key node. And so what I'm trying to show you here is why 28.48 is so important. So in the 1987 crash, even though it was a very, 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 very scary crash that day, all it did was do a 38% retracement of the all-time low of 28.48. Exactly, folks. And that's right here, right down here. And it's a little hard to see. Okay. So then we rally up into 2000. What's it do again? An exact 382 retracement off the 28.48 node. We then bounce. So this whole thing right here, folks, was a correction. A, B, big C wave. So this was basically a flat. You could call, yeah, it's an expanded flat correction. The whole thing was a 7-year correction. What did it do off of 28.48? Well, it closed right at the 50% retracement. It did a 0.618 retracement of the all-time biggest crash in the Dow, which was the COVID crash. That's this guy right here. But also did an exact 0.618 from what? From the 1987 node. 28.48 is a big deal. So COVID, I really thought we were going to go a lot deeper, didn't you? That was pretty crazy times. There's the COVID crash, 28.48 node, an exact 382 retracement. Exact. Buy. Bam. Off we went. So with the Dow, where is that magical 382 retracement? It's 27,866, folks. And guess what? We've got a cluster. We've got what we call confluence area showing up around 27 to 28,000 on the Dow. That's 10,000 more points. Does it really seem that off? But that's the buy. So what are we doing right now? Well, why do I think we might bounce? Because this red line, okay, it represents the 2020 crash. This is 0.618 of it. That was the 2007 to 2009. So think about how nuts that was if you were still around. I know JC and I were, I think Spence, Draz. It was pretty damn crazy. Well, folks, we're pretty much there right now. That's that dashed red line. So we've done in about 2 months about as much damage as we did in 1 year. I think we're going a little bit lower, folks, right? So if we take that 2020 crash, we've got 33,924. But ultimately, I'm going to go out and say, I really want to look at that 27 to 28,000 to go long. I know that sounds nuts, but so did the gold short, right? I'm trading like you see, right? So take a look at that Dow. So when you start doing your own work at home, any type of analysis you're going to do, when you might want to find support, I'm going to be looking for it for us, folks. Use that 28.48 node. It's key. All right. The other thing too is I was actually looking, just so you know, it was 46,989 days ago. And if you remember, I was looking for that as a square out. I was also looking to see if there's any harmonic numbers to that, and there's really not. But again, I'm thinking we're finding support this week, maybe even could be tomorrow, and we're going to bounce. If you got some, you know what's of steel, you can buy it. But right now, let's all just step aside, relax, see where we're going here. 28.48, keep that on the Dow. 27, 28,000 is where I'm looking for support to potentially buy this thing. Dare I say new all-time highs? Okay. Yeah, and it's very important. We've talked about it. I want to see what's going on with that. But reason I put this in, again, if you follow me, we're following the same flow, right? The yen is very important. And if you remember, I was like, hey, it should find support in and around here. Isn't that crazy? We were talking about that 3 weeks ago. So just again, think about what's going on here. It's not about me, folks. I've just trained my eye. I do price projections and everything. I do all the leading indicator stuff. But 3 weeks ago, we were talking about this level on the yen, and it hit and it held. What's going on here? I know we talked about how the foreign currencies is the largest market in the world, right? So here I am in my basement, and we're just doing price projections, and it found support. We really don't want the yen going below about 143.70. So we're going to take a look at that here at the end, because at the end of the yen, see that? See how I did that? But I just wanted to bring that up to you too. The yen is finding a little bit of weakness, i.e. US dollar strength. Then it should take a little bit out of the it should take a little bit of power out of this crash. That's, big correction, whatever you want to call it, that's happening right now. So that's a good sign for us to be finding support. Okay. TBT, we talked about interest rates, right? They're on our mind. I told you guys I got long at TBT down here, about $14. Yes, I've ridden it the whole way, and you're like, why? That sucks. It might, but I told myself, when I hawked this when I bought it, I want to live through the entire machinations of this move so I can understand the emotions that I go through. This was great. This is making me question my thesis of we're going to go to new highs on TBT, right? Why not, right? But we've got a beautiful buy all the way down here, kind of blows, right? But we've also got a 0.618 price projection at 28.46. Watch that. 30.36 should be important too. All right, get back there. So for our TLT peeps, this is a beautiful sell pattern. Selling TBTs at about 96. Let's just say 96 to 97. That will roll over TBT, and TBT goes higher. Note, I didn't show it here too, but right at that sell pattern is a nice little gap too on TLT. Again, think about the NASDAQ and how it gapped over where the pattern was, right? TLT could gap over and it's gone, and it could go all the way to 104. None of this is certain, folks. It's all probability. But we want to trade where the patterns are, because that way we can manage risk. And if we just jump in the market now, how do we manage risk, right? Where are we getting in? So that's why 96, 97 is so key for TLT, TBT. We could gap and go over it, and our next target will be 104. Okay. Man, this one surprised me. When you talk about really important levels, this XLP NYA level is huge. And again, remember, this is a ratio analysis. What I'm doing is I'm showing the staples, toilet paper, I don't know, Campbell's soup, toothpaste. Shit's going downhill. Let's all go into staples. What do we need? And that's the institution. So when the institution roll into XLP, the ratio, not XLP buy, XLP could be going down like crazy, but the relative strength of XLP compared to the overall market gives us a risk on, risk off. This thing exploded right into our sell zone, and it closed at the high end of it. Certainly looks like it's going to fail. That means we're going lower, folks, right? So I was hoping for support, and you saw I put maybe. The blue arrow here, that's the largest corrective move in the ratio. It blew through that. Certainly looks like we'll be going lower. And this, when it closes at the high end of the high end, it looks like this pattern is going to fail. Okay. What does that mean? This was that long down, that monthly downtrend line in the ratio. And then this right here is a 1.618 price projection towards it. That should be some resistance, which should help us find some equity support. Theme of this week is scary right now, maybe scary on the opening Monday. I think we're finding support this week. I don't know. But we'll look for divergences on an intraday. And I'd love for it to be up here when we find support, right? Because then I'll know where we are. All right. This is the one that really has me scratching my head. We've talked about it before. Okay. Again, ratio analysis with pattern recognition is very, very powerful. And so what we have here is we have the dollar yen, the dollar versus the yen over banks, over banks and financials. That's the candles. Okay. The blue line is the banks and financials. And what I want to show you is every time this ratio of the yen versus the XLF, basically the yen strengthens. Okay. Every time it bottoms, the financials top. We're way up here, and this is looking pretty good. So if we clear, again, remember, folks, this is a monthly chart. If we clear through this area here, see this 1, 2, 3, 4, 5, almost 6 months, this little area here with strength, that's not looking good. Okay. Keep an eye on this ratio. I certainly am. And the other thing I'm noticing here is this is the first time, right, that we have a higher low. It is higher, folks. Trust me on it. It's not a low that was lower. It was a higher low. So if this ratio is taken off, man, the financials are not in good shape. And what does that mean? Well, the financials lead us up, the financials lead us down. So let's be very cautious. Okay, we talked about the gold futures last week. I said it was setting up for a potential short. It's banged into the target area, and there's nothing to really do right now. Okay, if you're a gold bull, I'd stay bullish. If you're a gold bear, you might want to look at being bearish. But what am I looking for? I'm looking for a signal reversal candle because this is a massive move, right? And I'm just not going to jump in front of that train. So we'll wait for gold to find some support. And then if a sell pattern appears, then we'll give gold a short. But right now, I'm just letting it go. It's hit the target. It's supposed to be doing what it's supposed to be doing. Man, did I got a lot of hate for that, which kind of told me that it might find resistance because everyone's so sure that it's bullish. But trust me, guys, like I said last week, I didn't know. It's not what I think. My job is to show you what I see. Not what I think, right? I saw 1, 2, 3, 4, 5, and a really, really strong set of targets on gold. And so it's hit. Some of you got short. That's great. Me, I'm waiting a little bit, find support, rally. If sell pattern's there, then I'll give it a sell. Again, here's the ratios. And again, why did I really see the gold short? It was because of this chart. Right? So what we have here is staples over gold. And then the gold line is gold. I showed this last week, but what I want to show is this ratio, okay, the candles, this is a perfect buy pattern. Perfect buy pattern. And you can see when the ratio bottom, gold is topped. Ratio bottom, gold is top, gold way, way up here. And we have a perfect buy pattern. That was where I was asking what the sell was. Let me call up this chat. Sorry, guys. Daniel, no, not a 7-year correction. I didn't say that. I don't know where the 7 came from. Let's see what's going on. Hey guys, sorry, I didn't see these. All right. Good evening. What's up? Bart, save us. He saved me, Daniel. Yeah, Ray, it's pretty ugly. Oh, Jerry, cool. It's awesome, isn't it? Dude, it's so cool. Talak, I saw the targets. Did I see this coming? Of course not. I'm never going to say that. But I did see the targets. We had a massive sell pattern on semiconductors. We had a massive sell pattern coming on Goldman Sachs, Blackwater, JP Morgan, United Airlines. I mean, all these patterns were hitting, which meant either going to work or they're not, right? And they seem to have worked. Daniel, no, I have not seen a self-inflicted wound like this. But again, it had already occurred, is what I'm saying. The cycle, the news breaks with the cycle, not the other way around. So this thing had topped about 3 or 4 weeks prior. We just weren't sure when it was going to break. And then, yeah, we self-inflicted it. Oh, it's going well. Barts chart S&P low level for 20. Barts charts S&P low level for 2025. Marley, I'll post that one day. I kind of gave you it in the Dow, but yeah. What pattern was Trump's tariffs? I have no idea, but they hit in December, 4 months prior, right? Jimmy loves the 382. Who does? All right, I'm caught up. Sorry, guys, I didn't have that in the thread. So anyway, this was a great buy pattern on the ratio. Every time the ratio has found support, gold is rolled over. I try to keep it easy. So here we go. Let's talk Tesla. All right. Talked about it last week too, didn't we? Yeah. So, man, here's the largest corrective move ever in Tesla. Here's nodes 0.618 and 0.841, 786, right? But look at this 1, 2, 3, 4. And when 3 is extended like that, not a rule, just a guideline, 1 likes to equal 5. Well, folks, 1 equals 5 at 173.73. I'm going to be looking to buy it there. Very, very, very tight stop. But why not? But the bummer is this is 5 waves down, which means what? Probably 3 waves up and then another 5 waves down, right? So I don't think this is the end of the move down in Tesla, but we should find some pretty significant support there. And wouldn't you want to be buying at that level where everybody who has ever sold Tesla, the maximum down it's ever been, everything like that, that's at 173.73. Well, why not give it a shot? Risk 50 cents or $1, right? But I do think Tesla has this wave coming down. And again, that's $50, folks. But the way it's been moving Tuesday, who knows, right? So there's Tesla. Keep that one on your radar screen. Well, certainly thought we had a triangle going. It looked good last week, didn't it? The A, this was the low. Here's your A, here's your B, here's your C, here's your D. Remember I said, I go, man, I don't know if it can make it up there, but it would be amazing if it could. And that would have been our D leg, and then we would have shorted. Oh, crap. So I erased it. I'm not, I'm wrong. The patterns fail. Okay, erase. What I saw is what's called a mirror image foldback. And so see this point right here, how this sticks right here. And so to the right and to the left, a lot of times what the market likes to do is the same thing. So we go down, we go down, we go up, we go up, we go down, we go down. So this final down move right here, I think that's where we might be. And look at that. This is this right here is a projection. A, B, C, D, right out at 99 to $100. We've got the measured move finishing up the mirror image foldback. Here's another thing. So we also have this 0.9438. I know no one's ever really heard of that, but it's actually a really key level. Not to geek out on you guys, but the 12th root of 2 is equal to 1.05946. We've talked about this. That ratio is the ratio we use to tune each one of the instruments of the equal octave scale of music. Okay, we know that the frequency of a string is equal to the square root of its tension, or 1 over the square root of its length. So square roots and 1 over the square roots are extremely important when we start talking about vibrations and all the stuff we're talking about right now. So if I take the inverse of 1.05946, I get 0.9438. That's where that retracement level comes from. So guess what? A lot of times what it likes to do is it likes to repeat itself. So note, this ABCD projection lands right at 0.9438 retracement level. I'm expecting 99 to 100 to be support on Boeing. When I buy it, I don't know, maybe a little short-term scalp. Anything, if you're thinking of buying right now, I'd put in your mindset to do it for about a week. I wouldn't do it any longer. Okay. Let's see. Boom, boom, boom. Healthy 1400. I know it is. What Pfizer do? Just sold shares another to raise 3.2 with a bloodbath. Oh, hey, the other thing too, Michael, did you know that the high on Pfizer was 61.8, 0.618? Go look at it. Pretty trippy. Jason, I'm not the man. You guys were all the man. Plus 50 tomorrow. Why not? It's going to be insane. But here's the thing. I'm telling you, it's going to find support on Monday. Let's see. Maybe, maybe not. Anyway, there's Boeing, 99 to 100. Ford's hanging in there, guys. We've been talking about it. I don't have a position in it yet. But again, when you want to go and look at a position that you might want to take, do the ratio analysis. Again, I like NYA. Why? Because it's got everything in it. You can do Ford to the Dow, NASI, and everything, but it's like, why not do everything? So one, it hadn't made a new low on the ratio. And two, it's showing some relative strength. We got to keep an eye on Ford. And then look at Ford here. I didn't put it in. I'm sorry. It really hadn't gotten slaughtered that bad. Keeping an eye on Ford, folks. Bitcoin. Oh, Mr. Coiny Coin. Whew. What are you doing? I'm seeing some support coming in, folks. 70 to 72. I haven't looked at Bitcoin yet. Let's see if it bounces. But again, why am I doing this? I found a cluster. And then JC and I are talking about maybe doing a course. And it's easy. It's project, extend, retrace. PERS. Structure. What do I mean by that? Basically polarity, right? So in this case, we have a high and a low. So for a little bit, we have what? A down move. And when we have down moves, we're looking for resistance points. Okay. So those are the resistance points, these red lines. Blows through there. What happens? Polarity. That's your structure. So you project. Where could this go? You extend off extensions. That's what this blue arrow is. Have you ever done an extension off of a gap? Do it. Do it. Extensions off a gap are huge. And guess what? 1.27 extension, square root of 1.68. Do retracements off of gaps. Okay. They're important. Why? Well, I showed you with the NASDAQ. They're key nodes. So that's what that blue line is. And then you do retracement levels. Then you look at structure. And so look at all of this polarity here. Bitcoin should find some support around 70. If it doesn't, ouch, it'll probably go down to about what? 56. See how it works? It's easy. Project, extend, retrace, structure. And then on a really long one, I'll throw a D in there every once in a while. PERS D, divergence. Throw a 14-period RSI in there and go, let's do it. We're going to go with that, Daniel. I'm going to take a look at MicroStrategy here in a second. You'll see. Great question. Super question. I keep looking over here because I got another screen over there, so sorry. Microsoft. So three weeks or so back, we talked about Microsoft and how this could be a big five here. Well, kind of important. Why? Well, we've just had if there was some big bullishness in Microsoft, this pattern would have probably held. It's a 382, ABCD, 127. This should have been some nice support for Microsoft. Here's the next measured move down. So our next target on Microsoft, about 3,480. The red line, project. I'm using the measured move to project. Extend. I'm extending off of here. Retrace. I'm retracing off of here. Structure. There it is right there. And see how nothing is open or closed above it? So that's a good little line. That's a good node. So I bet we find some support on Microsoft about, let's say 337. 337 to 340. But again, this could be it for Microsoft up at 460. Crazy, I know. So I forgot who asked it the last time. Ray, I do. It's still a work in progress for me. But the foundation of market cycles they're the foundation. They're amazing. So what I have found for me is Ray, I got a little lazy because the measured move will incorporate the cycle. So I've studied a lot of different cycles, a lot. And, in the end, it just came down to the pattern was always there. So if I can find the pattern, then I can go and I can take a look at doing some cycles work. But ultimately, it's the measured move. And so I forget who it was, and I didn't have the example ready the last time, but here's Netflix. And so when and if we blow through these measured move price patterns, then I'll go to log and I'll start looking at percentage corrections. So in this case, This is Netflix log scale. It completed the exact same percentage moves for the high. And then it banged into the 1.618 extension. Pretty wild, right? No idea what Netflix is doing. No idea what the show is. 2% moves exactly the same. That was the high. So yes, we will use both price and logarithmic. You can actually use the logarithmic number to do price projections, but we'll use price and we'll use percentage of that price move to do projections. Okay, pretty cool with Netflix. Where could it go? Well, we can start getting a clue of how deep this correction goes when what? When the bullish buy patterns start failing. Watch Netflix in and around 800-ish. Okay, why? There's our projection. There's our extension. And I use the retracement level, look, from the gap right here. See that? I used it right there. Bam. 800, big deal. If you're a bull, you want 800 to hold. If 800 does not hold, then we've got this gap here down at 720 or so. But ultimately, the market's telling us something. The other thing I learned from Michael Jenkins is it's important to watch swing lows. We really don't enter into bear market or a really deep correction until we've broken at least 3 swing lows. Folks, we haven't really even broken one yet. This you can count this as 1, count this as 2, count this as 3, right? But again, the market's down 4.15% right now on a Sunday night. Trust me, I understand this is a big deal, but 30% correction is normally what this market likes to do. So let's get that in our mindset that that's about what we should expect for now. Okay. Netflix, about $800. Watch it. And if Netflix bounces at $800, then go to an indice, go to Microsoft, go to one of the other high flyers and go, oh, they're all kind of finding support. Okay, a low might be in for this week. Let's see what we could do here. Maybe let it go for a little bit and then try to buy the retest and do some calls for a week out or something. But again, right now it's looking pretty dicey. Talked about crude. I wanted to show the measured moves on crude. It's like, where could crude go? Well, it's told us where it wants to go pretty much every single time, right? Big move down. By the way, this was 144 on my birthday. Yeah, no kidding. There's a story to that, which I can share later if you want. Anyway, so look at this move. Same move, same corrective move, even though it went all the way down to basically minus $40. And then this move was 0.786 exactly. It's crazy, of these previous 2 big moves. So certainly looks like they'll want to go down to about $44, $43. We've got a projection here, but like I've told you in the past, I really want to do projections if it can go up to 50% retracement or more. I'll still do it. It's really good if it would have landed on one of these measured moves. But let's look for the mid 40s on crude, and then this is a really potential to do a good buy. Sounds crazy. $13. Buy crude at $14. Why? Big deal. First off, this represents the biggest measured move ever in crude oil futures going down. These 2 blue measured moves. Copy paste. It lands right on this 1383. But what's this orange 0.618 price projection? Well, from the all-time high on crude, you go all the way down to minus $40. Then you go up and you project down. Folks, it happens very rarely. You want to be around when a all-time high to all-time low 0.618 price projection is also right on top of the largest measured move. That's not only happened once, but it's happened twice. And the other huge move down has been an exact harmonic to it. That doesn't happen often. So that's a long way to go on oil. But if we kind of take a look at what's going on, is it right? Are we going to have stagflation, deflationary crash? I don't know. I'm just calling it like I see it. All this machination in here between 24 and 65, okay, everything like that. But let's all be around if and when oil hits 1383. All right. Until then, I'll watch it, but that's my level, man. And I'll wait for a year or two, but I don't think we're gonna have to wait that long. So keep an eye on those. Those are our levels on crude. First go mid 40s, really great buy, all the way down around 14 bucks. I know it sounds crazy. So United Airlines, I mentioned this one, and I just wanted to show you again. It hit a perfect price projection. Bam, 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 bonk. You like that? Bam, 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 bunk. And so what I also wanted to show you was, again, tying in extensions with retracement levels. And what do I mean by that? So this low, from the all-time low to the old all-time high to here, is 0.841. Huh? It's actually a great level. That's the inverse of 1.1892. That's a musical note of the collective scale of music, folks. See what I'm doing here? So now we had the A, we had the B, we had the C, we had the D, and we also had what? We also had the exact 1.1892 extension, the inverse of what the retracement level was. Hello. All right. All right. Well, love Zimbabwe. Actually, I think Zimbabwe didn't match the tariffs or something. So anyway, yeah, I'll be done here in a second. I want to hear what he has to say. But see how I did that? When we have a projection that hits the inverse of the retracement level, we want to pay attention to that. But so what do we do with United Airlines? Holy smokes, look at that. Pretty sweet. And here's the thing, folks. Let's put this one out there. We got a month or so. We'll go into these later, but they're called square outs. So in this case, from the all-time low at $2.89, we went up to $115.82. That represented a $113 price move. From that high on 122.25, I now move 113 days. I get to May 15th, 2025. So what do we want? We want United Airlines to come down here, find a little support, come up here, come back down, and we're going to look to buy United Airlines in the middle of May. Let's do it. If price 35 to 38 and May 15th, 2025, buy United Airlines, stop out below 27. Now let's just all go surf, hang out for 6 weeks. So MicroStrategy, somebody's asking about that. Boom, boom, boom. Who was it? There you are, Daniel. Look at this one on Daniel. Look at this. Come on. Can it get any better? So I don't know if you guys remember. I do. Actually, I used to live in Northern Virginia. And I remember when Michael Saylor in Northern Virginia, right along the Dulles Corridor, started MicroStrategy. And he was talking about colonizing the moon. It was crazy in the 2000s. And he was going nuts. And the stock went nuts. And we actually used MicroStrategy in my last company too. Great company. But anyway, it fell. And then I was like, did it go out of business? And it hung out, man. Look at that. It hung out for so long. And then it popped. Guess what? The exact same measured move correction crash from 2000 to 2002 lands exactly on the 0.618 retracement from the all-time high to the all-time low. Come to Papa. Buy MicroStrategy 206.82. See what happens. Give it a buck. But that's what I'll be looking at on MicroStrategy. And then to round this one off, folks, I got to tell you, buy this book. It's actually an Adobe. It's called The Little Book of Coincidence. So all these sacred geometry shapes, all the sacred geometry stuff I'm talking about, right? It's pretty remarkable. And what I'm showing you here is this little book. It's a lot of pictures, but it's got tons of amazing information in it. These are the exact shapes that we find when we do a cymatic sketch of our DNA, the absorption of a cell. These are the shapes that are made between the different planets as they dance around the universe, folks. It's perfect. Isn't that crazy? Yeah, just take a look at that. That's pretty doggone crazy. So there's a lot going on, folks. And I'm going to go ahead and post this. I was part of a podcast. It's called the No Way Out podcast with Alan Green. I've mentioned it before. I've just started posting again. I sat on it for a while because I was like, all right, what's the message going to be? And the message is very powerful. Watch this podcast. It's called the America Codes, the No Way Out podcast. If you feel so compelled, buy the America Codes. It's 22 videos on purpose. There's something to that. And Alan started doing it 64 days prior to the election. There's something to that too, 64. And I watched every video, and it was amazing to watch these videos as the election was going through. And just to give you a little teaser, embedded or encrypted, however you want to talk about it, inside of our documents, the Declaration of Independence, the Bill of Rights, and the Constitution, are unassailable truths about the earth, the sun, the distance between the earth and the sun, the earth and the moon, the fine structure constant, the speed of light. It's unbelievable. And just to tease you a little bit more, Trump, Harris, Twin Towers, 9/11 are all encrypted in the Constitution. I kid you not. Additionally, in the Gettysburg Address, it's encrypted: forged theater, assassination, 13th Amendment, slavery. And oh, by the way, I do not err. So there's a lot going on. We found a King power plant or something underneath the Giza complex. I don't know if you guys watched or seen the Sean Ryan show with Chris Bledsoe and the UFO of God. There's a lot going on, folks. So just everybody chill out. We'll be fine. This is obviously a big crash. Oh, by the way, we're down almost 5%. We're now 3.97. The market must be finding a bounce. So are there any... well, we'll see. You know what I'm worried about that no one's really talking about? I actually had a call with the president of Versus AI on Thursday. I've talked about Versus AI before. Manufacturing is going to all be done by robots in 5 years, folks. So we've got a lot going on. It's going to be very interesting. So that's it for now. Is there anything you guys want me to look at immediately? I'm going to go stop screen sharing real quick. And let's go. Boop, there we go. Marley, I like you. I keep that. That's awesome. We're in North Carolina. Marley, I keep that kind of to myself. But yeah, that might be why everyone's freaking out. All right, folks, here we are. Let's take a look. So, right, this is the E-mini. 50% retracement level. Again, big deal though, right? This is since 2009. We're down here, 2009. Biggest correction. Was it? No, wrong one. This was the biggest correction, and certainly looks like, well, look at that, folks. Maybe we found support. Isn't that wild? Found support, 0.5. Now, we get through there. No big deal. Remember our structure? I really like this level right here. It's about 46.23. We have a very nice, from the 2009 low to the all-time high. 382 comes in at 40.7350. Yeah, Wavy, I'll take a look at copper. I'm not sure where that one's going. Yes, Donna, nice work. Yes. So we have a 382 on top of what? 786 retracement of this. Folks, this is a nice level, 40.70s. Keep an eye on that one, right? But remember, if we lose the low that came in, and let's go down here, get a little intraday on you. Kind of wild, isn't it? So there's the open. Let me get it bigger for us. So open, scary, There's the 50% retracement. I don't know if I have the yellow line anywhere around here. That level right there represented the largest corrective move since 2009 to 2025 or 16 years. Exactly on the 50% retracement. And what's happened is we've bounced. So what do we have to do? Well, obviously, folks, can you see it? This is a pretty big gap on a 5-minute chart. So a rally into the gap and then fall down is probably something we could count on. But ultimately, this 48.40, this is our line in the sand right now. We get through that on the E-mini. Here's the structure, 46.10, 46.14. Remember the structure? And then here's the overlapping fibs down at 40.76. Those are our levels this week. Going into this week, what are we expecting? Well, expectations always kill us, right? They always kill the cat. I'm expecting us to find some support. I'm expecting us to bounce. And then I want to try to short it maybe early next week. Who knows? And then looking to buy probably mid-May. Remember that United Airlines square out? There's a lot of other things going on there too. Get out of here. USD, JPY. How's Mr. Yen doing? Okay, gap down, didn't make a new low. And we understand why this is such a big level, right? This actually where it's closing is the 0.618. So we want the yen to stay above 144. Funny. UI, let me take a look. What is it? What is UI, Marlon? Never heard of it. Maybe I have. So 2012. Well, there's no pattern that I can see. Well, maybe there is. I want to find out why we had this high. So what I'm doing is I'm down here. I'm actually over here looking, and I'm just doing a quick projection. So we never really made it there. So I'm projecting. You guys, it's this easy. I'm extending. Where's my 127? There it is. There. Well, it didn't make it. Look at that. I would have expected 482 to 490s to be resistance, so it barely made it up there. So what can we expect? Well, the first big measured move down, I got 6 minutes. First big measured move down was this. See that? And we've gone through it. Bummer. Next one would be this. So that's kind of interesting about 221. So now what do we want to do? Now we're going to go ahead and we'll do a retracement. How's everybody else doing? Man, the waves, there's no waves. Look at that. All right. I'd say I'd look for 221-ish. That's support. I really, 1, 2, 3, 4, 5. I don't know. It might be going down a little bit lower, but initial support maybe in here. All right. All right. I'll do whirl. You got it. T-core. Is it T-core? Did I say that right? T-core. It's easy as 1, 2, 3. A, B, C. 1, 2, 3. Baby, you and me, girl. 1, 2, 3. That actually looks good. Take a look at buying it at 92. All right, cool. Yeah. Now, get the hell out of Dodge if you get below there. And the reason I say that is I'm going to say that, okay, we must have IPO'd a couple of years ago, right? Sorry, I keep looking at the the chat. So, is this a corrective move? And down we go lower? Or is this 1, A, B, C, 2, 3, 4, 5, off we go. So I think it can't go below 92, right? That's a rule. So that's why I was like, if you're bullish this, then you want to buy it at 92. If we go below 92, then I'd be looking at, we could be going lower, and this was just a corrective move. And so what do you do then? Then you go, all right, well, what could happen? First thing that could happen is 66, right? Now, one thing I could do here is, because this is a lower high than here, I'm going to project. Remember that? So I'm going to go, here's my one spot, here's my other spot, here's my next spot. And I want to know where the 0.618 is. 0.618. I did 10.618. That ain't going to work, folks. 0.618. Done. Okay, pretty low. But that'll be nice support. Look at that. Sits right on a 786. 84, 82 bucks. All right. I might post XOM because I was looking at that one. Maybe. So, you guys, thanks so much for joining. Let me go back here. Let's see what's going on in gold too. Sorry, I just want to look. Oh, XAU. Nothing much, right? Let's go to an hour. All right, there's good. It was really funny on the research team. I wanted, I had a gentleman's bet, but I was really hoping that that I would have topped right here, 3.14. We talked about that, Michael. Right now, let me go back here. Then we'll get going. You're welcome, you guys. I love doing this, man. I'm stoked that you guys are here, man. Check this out, Michael. Alrighty then. There we go. Boom, 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 boom. So there's TBT. All right. And I'm seeing, I mean, that's some nice candles, but support for TBT at 30 and 28, ultimately buy TBT 21, 20 bucks. When you take a look at TLT, see, that's the projection up into about 96. We also have some pretty stiff resistance at 95. So what I'm air quote hoping, hope is my strategy, is that TLT will smack into these levels and roll back down, and my TBTs won't erode any more than it is. So, all right, you guys, we're good. Thank you so much for joining me. Pass it around. Hopefully this is helping you manage risk, giving you some ideas of what's going on. Metals looking toppy, right? Euro, dollar, I think no man's land right now. I think the yen's definitely strengthening. Bonds, I'm still bearish bonds for another leg down in bonds, so another little bit more move up in interest rates. And overall, I'm expecting some support this week with a bounce and then a rollover down into the middle of May. So I'm not looking to buy this market for I looked at my calendar, another 6 weeks. All right. That's me, but we'll update it every week. All right. And what I'm trying to do is I'm trying to follow the same pattern. Imagine that I go through all the time. All right. So have a great week. I got a ton of emails this week. I really appreciate it. I try to answer them all. And don't sweat the load, man. Go surf. It's all good. All right. Thank you.